Hi again, welcome to lesson 3. Now I have some good news. The hardest part of this method is actually over. You already know where to enter. What you still need to know is what option contract to actually trade. And how do we track so many stocks and spend only 15 minutes a day on it? Let's find out with a hypothetical example of Axis Bank. Now imagine this scenario. It's 3:15, you have only 15 minutes for market close. And it's, let's say, the 14th of October. Axis Bank is trading 2.5% higher today at Rs 397 per share. Now let's open the charts, see what just happened. If you notice, we just crossed a swing high. Now, since the market still has 15 minutes to close, we can place an order. A swing high cross, as we've seen in the previous lesson, means we have a very high probability of the market going up. We can now buy Axis Bank call options. Your order will look something like this. The symbol is Axis Bank. You will buy the current month contract. You'll obviously buy a call option since you're bullish, and the strike price. Your strike price will always be at the money. Now, if you don't remember, the strike price will be at the money. Now, a strike price of at the money means you will buy a strike price which is closest to the current market price of 397. So you buy the call option, let's say it's trading at Rs 100. Your exit will be fixed at 30% from entry price. So that's 130. That becomes your profit target. Now, there are various ways of booking your profit, but in this method, we have a fixed exit. So if you enter at 300, you will buy 30% higher. Now, in this case, you're buying at 100 rupees, so you add 30%, that's 130, will become your profit target. Our stop loss is also the same. It's 30% from entry and will be placed at 70 rupees. Now, once you've entered your trade, let's say you bought the call options at Rs 100, the next day when the market opens, all you need to do is spend 5 minutes to place your profit target, that's at 130, and your stop loss at 70. So automatically during the day, if the markets rise, you will book your profits. And in case the trade turns sour, you will exit at your stop loss and lose not more than Rs 30. Now, if we spent a little time, we could improve the risk to reward ratio. But since we're spending only 15 minutes, this is the best that we can get. Here's a little tip. To alert any trades in your absence, since you'll most probably be working during the day, your terminal, your broker terminal, will allow you to place an alert. You can talk to your broker of how to do this. So when prices reach an important area, you could probably get an SMS or an email notification. So that's it. Once you get a swing high break, 15 minutes before the market closes, you place a call option buy order. And the next day, you can place your stop loss and your profit taking order. This entire thing will not take more than 15 minutes. And that's all it takes to get you started. Soon, after you do some backtest, I hope, you will find some loopholes. You will tweak and you will improve the method to your liking. This is good and it is encouraged by Trade Academy. In fact, you should even share your tweaks in the comments below. But perhaps you can set a higher reward and lower risk to improve the entire method. You'll notice the most important thing in a trade is actually not your entry or exit. It is actually how you manage your trade. When you make a winning trade, how much do you make? And when you lose, how much do you lose? In this case, our ratio is 1:1, 30% profit versus the 30% loss. And what our edge is that our probability of success is high, so over a couple of months, we will be profitable. So what did we learn in this lesson? We are taking a trade based on the statistical edge that a swing high or low break gives us. Now, in case of a swing high break, we buy the call options, and in case of a swing low break, we buy put options. Here are the setups for rules for long. Remember, this is only valid on the daily charts. Number 1, wait for a bar to break the swing high. Number 2, when you see that, buy at the money call options just before the market closes, say 10 or 15 minutes before. Number 3, your exit is fixed and you will exit 30% from entry of your premium price. Number 4, your stop loss is 30% from entry. Now all of this, as I've said before, takes only 15 minutes. That's 10 minutes to place the entry and 5 minutes to place the stop loss, which you'll do the next morning. Now if your broker has a mobile app, Then in between your run to the water cooler and the snack at the office, you can place your trade. In the next lesson, we're going to discuss some pitfalls and some more pointers you'll need before you place your first trade. See you then.